Hello everyone, I'm Oral David here and welcome to Adventure Terrain Ventures. So we were discussing about the types of traders, and I think today we're going to conclude the types of traders. So we have two more types of traders we're going to talk about today, namely the money market trader and the associate trader. So who is a money market trader? Now we would have heard of equity traders, we would have heard of derivatives traders, we would have heard of commodities traders, but there is an asset class called the money market as well. So cash is also an asset class. So when you treat cash as an asset class, we can people trade the requirement for cash. So money market traders are those who trade in financial instruments that range from very short maturities. These are instruments that have they have a good liquidity, high liquidity, and they have a very short maturities. The maturities could last for a day sometimes and maybe within a year. So these are all short-term maturities. So whenever these financial whenever these financial institutions like banks and other NBFCs, etc., they need funds, they borrow from other institutions, and the price of these financial instruments would change based on the demand and supply of funds. So a trader is one who will buy when the rates are lower and he would sell when the rates are higher. So the difference would be very small, but they would be trading with very large capital. So that's how they make their profits, by trading these money market instruments. So however, these kind of traders being present in India is is quite less, but they are more prominent in places like US and Europe and other markets. The next type of trader we're going to talk about is an associate trader. Now, the definition for an associate trader is very broad. There is no one clear definition for an associate trader. As the name suggests, he is a trader who gets associated to someone. That someone could be a high net worth individual, or it could be a fund, or it could be a bank, or it could be a hedge fund, or any other financial investment firm or trading firm. They could be associated. Now the association could be in any form. Sometimes the trader would bring in capital and then he would take expertise from the firm, trading firm, and trade his own capital and share on the profits, or the firm could be bringing in the capital and the trader could be using his expertise to trade the firm's capital. In return for, he would get compensated as a share in the profits that he earns. So this could work in either way, but it is always a win-win situation for both the parties, the firm, or it could be the associate trader. Both of them would gain from such kind of an arrangement. So the lifestyle of such kind of traders is really good, because he could be one who is involved in various types of assisting the trading firm in fulfilling their financial goals. So friends, now let us have a look at some price charts, and I would like to show you some examples of demand and supply at work. Now we have here a daily chart of Tata Motors. So Tata Motors has been on a decline, if you see, over the last couple of days. So we have seen a decline in the price of Tata Motors. And but if you see, very recently, there has been an up move in the price of Tata Motors. So the question usually arises, is this a trend reversal, or is it just a retracement, and where the downtrend could further continue? So let me just show you some zones here which have a zone which has recently worked very well. So I'm just zooming into this area here. Just have a look at this. Just have a look at this supply zone here, which I have marked in red. This supply zone, you see, you have a rally in price, a period of pause, and a drop, a sharp drop down. So this is an area of supply. Now, if you see, notice this up move that happened in the recent past, in the last 4-5 days, it has led to a fall in price immediately after. So that is, price has entered the area of supply, and then we have a sharp drop in price. So this is a very good example to show you a supply zone at work. Okay, so prices were rising. Why did price stop rising here and start falling today? It's because of the area of supply that has been formed. So if you notice here, price had come very close to this area of supply and it fell off even before entering into this area of supply. So that gives me an indication that this zone is fresh. It has not been tested before, and that's the reason it worked. But there could be, while price coming up here, there were other zones. For example, this zone here, and this one more zone here, which it did not respect at all, which price did not respect. It just went through them and violated them. I'll just show you by drawing those zones. So you can see here, there was a rally in price, a pause, and a drop in price. So this is also an area of supply. So I have drawn this area of supply. But if you notice, price came into this area of supply and went through it, violated the area of supply. It didn't even react from here. It didn't even show any sign of reaction. So what could be the reason why this area of supply was not respected? So if you look at this area of supply quite closely, you can see that this area was once tested and price fell from there. Now if price is coming back into this area of supply, this is the second time price is coming to this area. So that is the reason it has not been respected, because this zone is not fresh anymore. So that's the reason you need to be careful to see which zones are fresh before you can actually trade those zones. So let me show you one more zone here. This is another zone. You can see there is a rally in price, a pause, and a drop in price. Actually, the price dropped till here. The drop is only a gap, okay, but still it is a drop. After the price dropped till here, market again went up and tested this area of supply and fell once already. So if you see here, when price came back into the area of supply, it is not coming back here for the first time. The first time it came was here. So when it came for the second time, it went through, it violated this area of supply as well. However, this area of supply, as you can see, is fresh, because once price left this area of supply, it did not return to this area of supply at all. It came back very close to the area of supply, but actually did not get into this area of supply. So that's the reason you see when price retraces back, it sharply fell, and now today's market would be creating another new area of supply right here. So looking for these areas of supply, we should also bear in mind whether that area of supply has been tested already or it is entering that area for the very first time. So now let us get back to our analysis of the Nifty, which we do every week. So Nifty has been very buoyant. The uptrend has been continuing. And as we discussed last week, as you know, Nifty is making historic highs. There are no areas of supply yet. So once we see areas of supply, that's only when we can think that, okay, market is now turning around and we can think of taking short positions. So the market has continued its up move. Today it has been a bit weak, but there are no new areas of demand that have been formed, nor there are any new areas of supply that have been formed. So we are still going to wait for this area of demand. Okay, now you may ask, why not this area of demand? We have a drop, base, rally, and then we have again a rally, base, and a rally. So why not these areas of demand? Of course, you can look at this area of demand, but you see the strength of the area of demand is very, very less because all these candles are very small. It has not moved up very sharply from here. This area of demand this area of demand here, where you can see a drop, a base, and a rally in price, is again a tested zone. So if you observe here, price left the zone and it again came back into the zone. And then prices went higher. So this zone is not a fresh zone anymore. So if prices come here back into this area of demand at any time in the future, this would be a low probability entry point. It would not be a good entry point for going long. Why? Because it will be coming back into the zone for the second time, the first time being here. So whenever we are trading this zone, we need to be cautious and we should not just confidently take long positions here. There's nothing wrong in taking long positions here, but you need to keep a very strict or a tight stop loss in case you get stopped out. However, I would not like to trade this zone. I would rather trade some other stock which has a fresh demand area rather than trade the Nifty. So I would still be waiting for this area of demand. So let's look at the weekly chart of the Nifty. So even if I look at the weekly chart of the Nifty, I don't see any area of supply that has been formed. So nothing that I can trade. Monthly chart of the Nifty, again, the same situation. Okay, we only have an area of demand over here. And the daily demand is falling within the monthly demand. So that increases the probability of that trade. So that's all we have time for today. I hope you guys enjoy your trading in the next week. Until we get back on the video again, may all your trades be green. That's it. Bye-bye.